So we are talking about incorporation considerations, and a question I am often asked is, do I have to hire a lawyer to incorporate? In this video, I'm going to walk you through my recommendations for incorporating to help you decide if you should hire a corporate lawyer. So many tenacious clients grimace when they debate hiring a lawyer to help them incorporate. Now, as a DIYer myself, I get it. I really take pride in my own work and have the anything is possible attitude. I enjoy learning new things and appreciate saving some money. This was the attitude I took towards my own incorporation. I dove into legal research online and thought back to the structures of the many clients I had helped as a staff accountant. Now, as someone who reads taxation law, I was fairly confident in my abilities to overcome this challenge. Instead, I became very frustrated and overwhelmed with the information that I was finding online. Nothing I read seemed to answer my specific questions and kept leading me down rabbit holes. After a few wasted hours, I considered that incorporation setups are something that can cause a lot of headaches down the road if done improperly. So I retreated to my own area of expertise, taxation, and I reached out to a corporate lawyer who provided me with the assistance I needed. Now, my lawyer's basic template had all of the aspects I had been looking for and provided me with the confidence I needed in my business structure. So hiring a lawyer is an important first step to properly setting up a corporation. A lawyer can be expensive, with fees often ranging from $1,500 to $2,500. But despite the extra expense, I think they are well worth the extra cost. When clients DIY their own corporation, our tax planning options often go right down the drain. Now, one client, a husband and a wife team, experienced this drawback after they self-incorporated. They ended up with a single share class split between the two of them. I see this all the time with self-incorporations. Both the husband and the wife owned 100 common shares. This gave my clients identical ownership of their corporation, but gave us, as their accountants, no dividend allocation options. So if the same class of shares are held, dividends have to be split 50-50 between both spouses, regardless of the work effort or the tax brackets. Now, a better plan for this client would have been to own the same number of shares with the same rights and restrictions, but hold different share classes. An example of this is one spouse holding 100 Class A common shares and the other spouse holding 100 Class B common shares. This allows us to allocate dividends to each spouse individually and provides significantly more tax planning options. So setting up proper share classes is really where a corporate lawyer comes in handy, and it can save you thousands on taxes down the road by allowing a lot more flexibility. Now, another client of mine experienced even more frustrations after they decided to self-incorporate. As an independent contractor with no employees, no spouse, my client didn't see the harm in self-incorporating. After reviewing countless government websites, my client had ended up with no shares of their own corporation. What that meant is that no one owned their business. They also had registered for a PST number or a provincial sales tax number, and they didn't need that, and they ended up having to deregister it with the Ministry of Finance. This was all a big headache and ended up costing them even more in legal fees to fix things. So these client experiences are results I see all the time with those who choose to self-incorporate. Because of the long-term tax planning implications, I would highly recommend a lawyer be hired to help you incorporate. So this recommendation is also true for the minute book of the corporation or the annual maintenance filings that a corporation requires. This filing is called an annual report and is done with your provincial government. It is in addition to and on top of your corporate income tax return, and it's not something that your accountant should be helping you with. So if the annual report isn't filed, business can experience some very serious consequences. Consequence number 1. After 3 years of non-filing, a provincial government might automatically deregister a corporation. This means that any assets held, like a company vehicle, can revert to the government. Consequence number 2. Additional corporate disclosures and mandatory filings can come with big penalties if missed. Many clients are often unaware of these type of disclosures. One example is the Beneficial Ownership Registry in British Columbia. This can have fines of up to $100,000 if not filed. Consequence number 3. Not filing shareholder declarations can cause dividends or other tax planning to be contested by the Canada Revenue Agency. This can cause huge headaches and significant CRA penalties. Now, if you're currently managing your own corporate minute book, the above consequences aren't something I see very often, but they are risks that you are going to want to manage. So in summary, hiring a lawyer can absolutely be expensive. However, the risks of not using legal services might be even worse. This is why I always recommend that clients use a corporate lawyer to help them set up and then maintain their corporation. I myself use a corporate lawyer, and I am very thankful for their services. Now, if you'd like a few recommendations on business structure so you can be well informed when you visit your lawyer, check out our handout, which is available on our website. All right, I hope this video has helped you decide if you should hire a corporate lawyer. That's all I have for today. Bye for now.